What's going on? Money Morning Live. It's always nice hanging out in the Profit Revolution with Mark and Sandusky. Great guys, great times. But right now, we're going to flip it up and we're going to be hanging out with Tom Gentile in Power Profit Trades. You were probably with us last night. We're bringing him back to talk more. Bringing him in 5, 4, 3, 2.
Hey guys, Tom Gentile. Welcome to Power Profit Trades. This is our Quantum Data Wednesday, QDP edition. We're back to a full hour on Wednesdays, guys. I didn't like just hanging out for a half an hour because for me, it kind of feels like it takes me a half an hour just to get started. So, anyway, full hour, we're talking about our brand new hottest strategy right now, Quantum Data Profits. Last night, who was here with me? With me and Garrett. I did a deep dive into quantum scripts technology. Who was here? Please light up the chat box. Eric's looking at it. I got YouTube running today. So I want to welcome all of our YouTube viewers, YouTube subscribers. Glad to have you back here. Today I want to talk strategy, Eric. I want to talk about what's going on with QDP. I want to talk about, I didn't get a chance to do it last night, high probability versus high profitability. I was calling it the rich strike versus epicenter. All right, both horses made it past the finish line 1-2. One paid out a much better amount than the other one. And so I want to talk about how that equates to quantum data profits trades. So we'll update you on how the trades are doing, how we're playing them, this market. We got to get through this market. Eric, did you see what Bitcoin and Ethereum did just this morning? Crazy.
I did. I'm not in love with it. I'll tell you that, Tom. Things are red right now.
They were a lot worse. I got to say. I mean, I saw Ethereum. These were things were moving around so fast between 8 and 9 o'clock that I actually had to turn off the notifications on my phone because I saw down double digits on Ethereum and then up 5 or 6% on Bitcoin, and then flipped and just all over the place. So that's just one area we want to get into. I want to spend some time, if I can, taking some of your charts and going through something I call the all-in-one chart screen. This is a screener that we have that's exclusively on our software here. So a lot of stuff that I want to cover here in the next 55 minutes. Before we get started, Eric, how the kids doing?
The kids are feeling better. They're back at school today, so which means I could have a normal work day. I could have some peace in the house. But most importantly, they're feeling better, which is great. Thanks for asking. How are your kids? I know there was maybe moving going on. You're busy over there. How's everyone over there?
We still got moving going on, but we're gonna take some time tonight. I think we want to go run and see Doctor Strange.
Oh, nice. So enjoy it.
We're gonna do, as a family, we're gonna do the first time we've been to the movies since like 2019, I think. We have not been to the movies since then. So it's going to feel like a whole new experience for us again. So
enjoy it.
Speaking of Doctor Strange, how about Doctor Strange stock market?
Oh yeah.
We'll get into that for sure. But let's start off. Well, first, Eric, what kind of chatter are you seeing? Did anybody join me last night?
We did have, I'm looking up at the chat right now, a lot of people were there last night. I mean, I was there last night. Everyone from Money Map Press and Money Morning Live were there last night. And it looks like a bunch of our chat was as well. So I hope everyone enjoyed their stay and hung out with us.
Yeah. And I want to, you know what? I got to give thanks out to Mark and Kenny and the whole team that have been looking over our quantum script stuff. And, thank you very much because they looked into it too. And had some great stuff to say. A lot of our subscribers, our members, are loving it right now, and I want to show you why. Because you know what, Eric? Let's throw those closed trades up. We've only been at this a couple of weeks, and here's what we've closed up so far.
Yep.
You know what, Eric? I'm gonna let you take over for a few minutes.
Yeah, take a second behind the camera, take a breath. I'll walk everyone through our closed trades, quantum closeouts since inception. WLK, it was a 5-day holding time, and the profit was 152.40%. We had Hack, 9 trading days was the hold time, 86.5% profit. FIS, 4 trading days, 100% profits. GME, 8 trading days, 100% on the profit. We have Trip, put spread, 5 trading days, 104.1%, and another one for Trip, another put spread, another 5 trading days, 101.1%. It seems like short hold times, Tom, and good gains from these.
And this was not a strategy that we put together for short hold times. This was actually supposed to be more of an average of about 30 days. But because volatility has been kicking these stocks around, it's accelerated that momentum trend, which is really ultimately the foundations of what we do here, is looking at trend and momentum. And so all of a sudden, that 30 to 45 day trade is closing out in 5 days, 9 days. I mean, it's happening 2 to 3 times faster than I expected. So while I'm comfortable with how we're performing, I am a bit surprised that we got this much this fast. So mean reversion, I'm looking for 2 things, Eric. Got to have a loser or 2, because there's people who look at this, they're saying there's no way at all you could just have a bunch of winners. This isn't real. And for those who are part of our membership, I mean, help me out here, guys. Those of you that have been with us, the last couple of weeks. Those of you that were in WLK or Hack or FIS or GME or TripAdvisor, help me out. Tell these folks this is real. I almost feel like I need a loser or 2 to get this thing to look more normal.
I'm okay. I'm okay with it looking abnormal. Keep the losers away as long as we can, Tom. It looks great.
Yeah, I mean, I was talking to Garrett last night, and I said, what the Oakland A's went on a 21 game winning streak, which was several years back, but and that was after they traded away all their good, all their talent, and they ended up rewriting the entire history of how to scout a player based on data. I mean, in a sense, the Oakland A's were doing what we do right now. It's just that we have better sophisticated computers now, and we're able to do things with thousands of stocks. They're talking about a couple dozen players they put together, looking at computer graphics, looking at all of their hitting statistics, what they do, first strike, second strike, third strike, et cetera, and looking at pitchers and what they do, what kind of patterns they have on the mound. And this is what the Oakland A's did to make this team so successful when they had a bunch of middleweights, I want to call it, because they're heavyweights. They basically went free agent. They left. They had a small salary cap in which to fill a team, and they filled it It was completely unorthodox at the time, and now it's the way baseball. Now it's the way how baseball managers and scouts fill their teams. We do something very similar here with Quantum Data Profits. We are scouting, in a sense, stocks that at the very foundation have momentum. Let me show you something real quick. I'm going to show you a picture on the screen. So this is my mentor, George Fontenilles. He's on the left, and yeah, you're right. That's me on the right-hand side. A little skinnier, got a little more hair on my head, a little more color in my face. That's when we used to do, we would go out and we do a lot of live events. So we were doing live events, I would say a couple times a month. And so anyway, he's the one that really we built the foundations. The very, very first piece of information that we use in quantitative scripts goes all the way back to the 1990s, based on a technical strategy that this man right here used on a regular basis. So I wanted to share that with everybody. But I mean, you take a look at these numbers here. They're great. They are, and of course, the volatility has really kind of kicked up how fast they moved. But in essence, what we did was we took a very simple strategy, and we had our artificial intelligence go in, take a look at it, add stops, work with stops, add money management, work with money management, add a noise filter in, and that really cut down the number of trades that we're looking at, and it made our trading much, much smarter. So that's what AI is there to do. It's to help you find something that works and make it work better. So, you look at this stuff and then you look at the markets, and the markets are all over the place. I mean, today, when I do a gut check on the markets, I see the Dow's back up almost 400 points this morning. I mean, we were down now, and then we were up, down again, up. Now all three indices are in the green. And, it just to me goes to show that this market still does not know what it wants to do. Everything's up today on my watch list. When I look at gold, up, crude oil's up 5.5%. I mean, crude oil is kicking it right now. The bonds are up. You've got commodities up. Everything across the board is up. We're going to get to those in just a few minutes. But I mean, when you look at what we're looking at, up in a down market. And although, and I'll say this too, we're getting more bear signals than we are bullish right now. But the tech we're using has the ability to really surface those upside movers. We had one that came on earlier this week, and I have to say that the markets really did rip us that day. But we're back. We are back to break even and moving higher on our bullish trade that we put out on Monday. We also had a couple of trades that went out early this morning. So those of you who are part of Quantum Data Profits, I hope you had a chance to open your email this morning, because we had 2 new trades that popped open today. We'll talk about those at 1 o'clock. Okay, I'm going to get into our new trades at 1 o'clock with all of our members. And so, bullish trade we had on Monday. We had, obviously, WLK was a bullish trade in an absolutely nasty market that we had. So we're not only winning on the put side, we're winning on the call side. We're winning on multiple trades on the same stock. So I want to recall this to everybody. Quantum scripts will flag stocks with what we call that big move potential. And we're looking for these strategies to last longer than 5 days or 9 days. Hey, I'll take 100% profit in 5 days, 1 day, all right, 9 days. But the average returns, those kind of moves, we look at happening over a 30-day time frame or longer. And so from there, what we do is we then tailor the strategy. And what we actually ended up doing starting, I think it was a little more than a week ago, we decided to add 2 different trading styles onto each of our trades whenever possible. So we look for what we call a high probability trade and a high profitability trade. And I'll explain a little bit more of that in a moment. And I'm actually going to use TripAdvisor. I'm going to use TripAdvisor as my example, because that trade is already out the door. All right, it was entered, it was exited, and it was exited again. So I want to use that. We'll do a postmortem on TripAdvisor, and I'll explain the high probability trade versus the high profitability trade. Now, if you haven't joined us yet, there's still time, all right? For fastest access, you need to call Gabe on the phone right away. I think Gabe's with us right now, so you could even raise your hand, but calling him is the fastest way you're going to get into our session this afternoon. So that being said, let's go ahead and jump into the markets real quick. I want to do kind of a top to bottom. I want to talk about what is going on in all of the big asset classes. Before I do, Eric, did you have a chance to see what Coinbase did this morning?
I didn't see. I've been watching all the red. I haven't seen what Coinbase did. What are they doing now, Tom?
Man, this thing was in the 50s. 50s
Oh, no.
Pre-market. And I think part of that, we had Coinbase that was down. I'm sure that didn't help the cryptocurrency markets. But if I just type in coin right now, I'm going to go sideways here for a moment. I mean, take a look at that, $54.73. And you just kind of see the action that's been happening on Coinbase. The only thing that went up with Coinbase was volatility. The volatility in Coinbase was the only thing that's been going up lately, and it's really been making that up move. It really started breaking out a little bit over a week ago. Now, some of you that are Operation Surge Strike members are probably saying, hey, how come we didn't get into coin ahead of earnings? Well, because it didn't have the earnings pattern. I'll let you know that right away, right? But That being said, Brutus right now is logging this information. So who knows what could happen around our next earnings cycle. But maybe this might come up as a potential trade. It was definitely not an OSS, Operation Surge Strike trade, and it was not a quantum data profits trade either, right? But I wanted to share it with everybody because this is what everybody's looking at right now, and that's really the stock that has been leading the headlines today. All right, so today what I want to do is I want to get into what I call the all-in-one chart. I do this every Wednesday, and what I do with the all-in-one chart is I add in a number of different indicators. In fact, the only thing I'm going to take off is I'm going to take off the moving average indicators. What I want you to be looking at is what we call the channel test, the stress test on top of Fibonacci, on top of the implied volatility. So what we're seeing here right now is I said this yesterday that we're running into some, what I like to call some short-term support. All right. So for the last 3 days, we've been hitting short-term support down here just below the 400 mark on SPY. And as you can see, I've got a longer-term chart that's channeling down. I've got the short-term chart that's channeling down. And then I've got Fibonacci down here at 398.25. And so we're currently trading just above 400. Could this be an area where we find some support? I believe I'm a mean reversion guy. All right. I'm the kind of person that when the market leans too heavily one way or another, I start looking for signs of a potential short-term trend reversal. And that's kind of what we're starting to stack up with here. Now, if I were to look at anything on this grid that might tell me something indifferent from this, I would probably have to go with the short-term trend, which it's nasty. I mean, you look at that short-term trend, it's rough. Big red mouse back on here. So you can see, this is what I'm talking about. See that short-term trend, Eric? That thing dips down here into the high 380s. All right, so that's the only thing I see that could snake us down even more. That's SPY. All right, let's move on to TLT. So TLT, again, nothing has changed here. I'm not going to spend a lot of time in this area, but we did get a little bounce off of 113.67. We're getting a little bit of a rise in bonds today. Volatility's dropped. Now, volatility has not been this low in the bond market. You've got to go back almost a month. You got to go back almost a month to see the volatility this low. This could be a sign that we see the bond market actually rising a bit, right? Why do bonds rise? Okay, I can think of 2 reasons. If the stock market's going to be in a free fall, then traders are going to want to take their money out of risk and put it into something that we call a risk-off position, and bonds are considered a risk-off position. The second reason why we could see the bond market getting a bit of a rally here, and more importantly, that implied volatility dropping, is because maybe interest rates aren't going to rise as fast as earlier predicted, right? So that's the bond market. Again, cash is going to be inverse to bonds. Cash market's still high. We're at the top of the fib channels. We are running into some collision right up here around 28, which could give us a little bit of a pullback. And also volatility is kind of coming off too, which means if volatility comes off, we could see the cash market ease back a bit. How about oil? Okay, this is interesting. So I want to mention oil for a moment because long-term indicators, as I mentioned Monday and probably yesterday, still up. We are caught in a bit of a channel right now. And if you remember, I was talking low 70s to low 80s on the channel. We had some major droppage on Monday and Tuesday. And today, we're back up again today. I pegged oil up. Let me make sure I got this right. It's 5.25% higher today for crude oil. And so that's being equated into USO, which is what we're looking at right now. USO is the United States oil ETF. All right, you can see it here. It's currently trading just above 78. Again, the resistance area is going to be last week's highs, which is, I want to say, probably around 82. And that's where we see this kind of gravitating to. In fact, I see this gravitating up into the mid to high 80s as we approach summer. Said that quite a few times now. And it looks like that may be the case. Today is giving definitely a case that they overshot this particular ETF. Gold, what's going on with GLD? Well, GLD, yeah, I mean, you know what? Little disappointing. It's gapped up today. It's up a little bit today. I've got gold up, looks like a little more than a half a percentage point. In fact, gold's trading at $18.52 an ounce, up a little more than $11.50. And GLD, which is what we're looking at right now, currently trading at 172.45. All right, there's a lot of mess on the screen. The long term on gold still appears to be higher, although it's a slow burn to the upside. So what's going to have to happen with gold, if it's going to move higher, is it's going to do it quietly, right? But right now, everything shows that we're still in a short-term downtrend. We hit some double line support yesterday at the close. We'll see if that actually sticks. But I'm looking at resistance numbers, and I think the first resistance number I see are the highs that occurred about 2 weeks ago out here around 178. So we got a little ways to go before this short-term bear, turns into a short-term bull. That's GLD. Now, I want to talk about the new six, not the big six, but the new six. So the new six, Eric, are the six stocks that we have been trading right now, the first six stocks coming out of quantum data profits, all right?
Nice.
So the first one we're going to look at here is Westlake Chemical. This trade is behind us now, but I wanted to go back and do a postmortem on it. And the postmortem is, we were in this a couple weeks ago. Look how fast. You want to see how this doubled so fast? It's because when we got in, we were down here in the 120s. And 2 days later, the stock was at 140. When you get a 15-point bump in the stock, when you get a move that is, you go from 125 to 140, that's a better than 10% move in the stock in 2 days. You can bet that your options are going to jump by 100%, right? By 200%, which is exactly what our options did with Westlake. Our call options jumped by triple digits. And so we were out of half of it that first day. 2 days later, out of the rest. Look what's happened since then. It's calmed down because, when you get something that moves up that fast, it's not going to last. It doesn't in anything. We see this happening with nearly every security that we've been watching here, especially in this past year. So we've pulled back. It's interesting that Westlake's back where it was when we first started looking into it. But again, it's in the rearview mirror. Let's continue on. Hack. All right, so this is the Factor Shares Pure Funds Cybersecurity ETF. And Hack, we took a bearish position on. And as you can see, we went sideways for a couple of days and then boom. And I mean, we went from getting out at 50% to getting out of the rest of it around 100%. And then it even moved down even more. And so we're currently it's currently sitting pretty close to the lows down there at around $46, $46.26. This could move lower, but again, Hack is also in the rear view mirror. Brings me to GameStop. So GameStop, and I got to go back and take a look at here one more time. We're looking at GameStop. We still have half of this position on. So we've taken half the profits. We had a bearish trade in GameStop, as you can see. Took 100% profits, we took 100% return. So we took half of our trade off. So for instance, if you buy something, this is a put spread. If we buy a put spread for say $2 and it goes to $4, we just doubled our money. If you put, let's say, $400 in it, let's say you did two contracts at $2 a piece. So 2 times 200 is 400, Eric. If you take half of that off, you take your original $200 back, you put it in your pocket. Okay, so we're still sitting on this trade, and this trade's still kicking along, and it's higher. The back half of this trade is over 100% profits right now. We're going to let that one continue on because you know what I see down here? I see, and let me make sure that I'm on the right date here. Yeah, I see $78 on the horizon. That's that move to the downside. All right, so we broke 100 already. That happened very quickly. Now we're kind of reevaluating this one and saying, hey, this one looks like it's going to continue lower and double bounce off the bottom that happened before all the space apes came out and said, oh, let's pile into GME because of what's going on in Russia and Ukraine. And for a little while, they were right. And then, of course, all was lost afterwards as GameStop started to continue to drop. And now we're dropping back in. We see 78. I believe if we get down to 78, we're going to see a really nice, healthy triple-digit return on the remaining contracts, those 122, 117s. All right, so that's GME. Let's take a look at TripAdvisor. Had a couple trades in Trip. Again, Trip is done. All right, Trip's in the rearview mirror too. And for good reason too, because you can see what happened with TripAdvisor. You know, we had this one kind of drop very quickly. And as you can see, half of it came off and the other half of it came off. And we took triple-digit returns on both of those trades. I think we still have half remaining on one of our trades. But you can see this is why right here, this is why we take off half of our position, because in the event that it happens rather quickly, we want to get out of the way. Okay, we want to get out of the way, take our money off the table, because the shakeout's kind of happening now. There's a little bit of short covering, and potentially we're looking for that long-term move to continue. So there you go. That's TripAdvisor. All right. So I believe that brings me to our final stock of the big six. No, maybe not. FIS. FIS is a trade that we have taken. We've taken about 50% off on this trade. This was just a put option, and as you can see what's happened. It's kind of dropped down. We got out of half the trade for 100% gains. It's got a little bit of bump today, but not much. I mean, this is when I look at the move up today, where we were lower today than we were yesterday, and it has come back a bit. That does not tell me that the bear is over for FIS. And so, again, it's a lot easier to be trading with somebody else's money than with your own. And by somebody else's money, I mean we took ours off the table. Okay, we took our money off the table, and now we're dealing with somebody else's money. And so finally, I want to take a look at the trade we put on earlier today. I'm not going to get into what that trade is. We'll talk about that at 1 o'clock. But Monday, we took a bullish position in MRO. Now, I want to share something with you. These things don't always just go up when we pick them. It doesn't work that way, folks. Sometimes it takes a day or two, maybe a little longer. In this case, we got into MRO on this drop. So as you can see, we did not get into MRO down here. We got into MRO closer to where we opened. And of course, yesterday was a pivot day. Today, we're getting a nice bounce back because so goes oil stocks. MRO is up about 7.5% today, and we are closing back in. So this one's gone from, Monday down, Tuesday down, today back up. And what I mean by back up is we're back up to break even again on this one. So we see exciting things happening with Marathon Oil. So I wanted to share with everybody what I kind of call that new six, Eric. And so, like I said before, we've gotten more bears than we have bulls, but we added a bull on the screen this week. And for those of you, again, that are part of Quantum Scripts, check your email because we had a bull and a bear that we put out for you this morning, okay? And I'm going to touch on those two stocks because two of the three we showed last night, we went ahead and put out alerts on those and option trades. So we actually had, I believe, 4 option trades that went out this morning to everyone just after the market opened. So, Eric, you ready to get into some strategy session?
I was just going to ask you the same thing, Tom. It looks like we are ready to dive into some strategy. Take us through it. What's going on?
Yeah. Hey, before that, I want to show everybody, I got to show everybody the crazy chart of the day. This is Ethereum. Okay. Ethereum at 7 o'clock in the morning, trading up here above 2,400. Ethereum at 8 o'clock in the morning trades all the way down to 2,100. By 9 o'clock, we were back up to near 2,400. And now we're down below we're back below 2,300. This thing is all over the place. And I'm going to tell you the two things that's moving cryptocurrency right now. And we're looking for a shakeout here. This is what we're looking for. We're looking for the shakeout. We said, with Bitcoin down around 30,000. Ethereum was the Ethereum was the bullish of the two big coins. Somebody must have heard us on this one because the wallets came out on the sell side right after the CPI number. And so I think they looked at the CPI number and said, wow, 8.5 last month, 8.3 this month, higher than the expectations. Get ready, sell the assets. And it's funny because they started doing all this selling in the morning, and then the stock market said, and opened a little bit lower, and here we are higher. And I think that now the coin traders are out there trying to figure out, well, what do we do? We were down 11% on Ethereum this morning. Now we're down about 4%. But again, it's the most volatile market in everything that I trade, probably everything that you trade, Eric. So you have to expect that these kind of moves will continue. I mean, look, this thing was trading, not even 2 years ago. Bitcoin was at 4,000. I mean, you look at 2 years ago to now, and you're still seeing a 7x in the last 2 years, even with the pullback. So you got to expect these kind of moves. All right, I'm going to move to a stock chart here. And the stock chart is TripAdvisor. I want to talk about how we won on Trip. I want to break down two different Trip trades here. These were two winners, and they're two trades we call probability and profitability. Okay, so I want to show everybody exactly what happened here. So this is the stock chart as you see it. I stripped away all of the quantum data except for one piece. All right, and the one piece is the very first piece, the foundational piece, and it's a simple moving average crossover. Now, if you look at this chart a little bit more, you'll see, wow, we're down here. We're touching this what I like to call this stock chart peak support, and yeah, that's part of it too. I left that on there, but there's much more that goes into this, including noise filter and stock selection. All right, so all of this comes into why we picked TripAdvisor as a bear. Okay, why the artificial intelligence picked TripAdvisor as a bear. And so this was May the 2nd, all right, when this trade was first being alerted to our Quantum Data Profits subscribers. Now, at this point, I want to take us to the stock and option tables, because the stock and option tables, we were looking at the May 13th. We're only looking out a couple weeks on this because, again, what have we learned about bulls and bears? The bull takes the stairs. The bear takes the elevator. And by elevator, with all the volatility that's happening in the markets, we don't need 30 or 60-day options because these markets are moving in weeks right now. They're taking a 1 month trade and they're bringing it down to a 5 or 10-day trade. So we can get away with using options right now that are a little closer to today's price. So back on May 2nd, we're talking about a 2-week option, right? So in that case, if we're looking at bears, then what we're looking at are the put options. Because the one thing we want to do with quantum data profits is that we don't want to do with the other services that we offer is we want to make it as easy as possible. We want to make it calls, puts, call spreads, put spreads, okay? The differences between the two is one requires an additional level. So calls and puts are almost entry level in options. They are. Call spreads, put spreads, one level higher. We don't want to get into butterflies. We don't want to get into selling naked positions. We don't want to get into credit spreads. We want to make it as easy as possible. So with volatility as high as it is, you're going to see some spreads coming in now and then. But whenever we can put a call option out there, we'll put a call option out. Whenever we can put a put option out, we will put a put option out for the bearish trades. So I'm looking at these put options and I'm seeing, where the stock is. And so we looked at two different trades. We looked at the 26.24, okay? And then we also looked at the 24.22. And what I mean by that is, let's just start over again. If I'm going to buy the 26, that means I'm going to pay whatever that price is that 26 put's going for. Now I'm going to finance that trade by selling a 24. So for instance, in this case, now I'm looking at the close of the day, not just after the open when this trade was put on, but the close of the day. The 26 puts on May 2nd, were trading for 198. and the 24 puts were trading for $1. So if I pay, let's say I pay $2 for the 26 and I sell the 24s for $1, well, I'm paying $2 out, I'm taking $1 back. So the net cost to me is $1. Now, the other way we could look at this, that's what I call the higher probability trade, because the reason why is that we bought an in-the-money put. We bought a put that was, the stock price was below the put price, okay? So that's a quality pick. And so 26, I'm paying 2, 24, I'm taking in 1. So that means my break even, if I were to get it at those prices, would be $25 a share. I don't need TRIP to go much farther down than it is right now to be at break even. Therefore, that's what we call a 1-to-1, because it's 2 points between 26 and 24. If I'm paying $1 for a $2 spread, the most I can make is $1. All right, now let's take a look at the 24, 22. The 24s were trading for $1. The 22s were for 46 cents. Now let's just do this and round it up. If I bought the 24 for $1 and I sold the 22 for 50 cents, if I'm paying $1 and I'm taking in 50 cents, the net cost to me is 50 cents. This is also a 2-point trade. So it has a 50-cent risk, but it can make up to $1.50. So you can see that's the high profitability trade. The high probability trade was closer to where the stock is. Therefore, we don't have as much of a return on investment. The high profitability trade is farther away. We need the stock to move farther, but we get rewarded in this case 3-to-1. So we have a 1-to-1 trade and a 3-to-1 trade. So it's kind of like I said with the Kentucky Derby. If you bet on Epicenter, you are taking a high probability bet on the odds-on favorite horse to win the Kentucky Derby. If you took Rich Strike, who had the biggest odds across the entire group of horses, then you are taking a lower probability bet on a horse. But if that horse won, it was going to pay off a lot more. In fact, it paid off 80-1, right? I have to say, Eric, I don't know if you saw the Kentucky Derby. Did you watch this, or were you too busy?
I did not watch the Kentucky Derby. It's not something I would typically watch, so it wasn't that I was too busy. I just didn't watch it.
Yeah, it wasn't the Derby that was. I mean, the end of it was incredible, because you saw this no-name horse. They didn't even mention his name until he got in the gate and when he crossed the finish line, because around the track he wasn't even a mention. And all of a sudden, then they go, "Here comes Rich Strike on the end," and then he nudges it. He nudges it at the close to win the race. But what did the horse do afterwards? The horse is jumping all over the place. The horse bit another horse.
Oh, man.
They probably were going to be drug testing this thing 2 or 3 times, because the last thing in the world somebody wants to do is pay off an 80-1 horse. But apparently that's exactly what ended up happening. I want people to look at the 24-22 puts. That, again, lower probability, but if it wins, it pays off. It could have a much greater payoff. Now, we took both of these trades off, and I want to show you what's happened to these trades from the beginning to the end. So the first one I want to show everyone is the 20, let's see, I have the 26-24 put spread. So this is what the fills were coming in at right after the alert went out. So if you're part of Quantum Data Profits, maybe you got a little bit better, maybe you got a little bit worse, but this is where they came in at. They actually came in below our limit prices, right? So the 26 put was trading around 184, and the 24 put was trading around $1, right? So that's where they ended up at the end of day one. Now I want to share with you this. Here is what this cost per contract. So when you see when I say $1.84 and $1, and that's 84 cents, 84 cents, you have to take that and multiply it times 100, and that's the net cost to you, all right, or the gross cost before commissions. So $84. Then you see the 168 here. Well, what I did was I threw in the example if you were to buy 2 contracts. That means buying 2 of the 26s and selling 2 of the 24s. Everybody see that? So at the end of the day, this thing was already up mid-price about 16%. Had a 16% mid-price close of the day. Let's take it forward, and let me show everybody what happened to this. I'm going to bring this back a little bit. Now I'm going to go plus a day. So here comes May the 3rd. Now it's up 31%. Okay, you can see that right there, Eric. All of a sudden, what's going on? Well, what's going on is this. These 26 puts that we bought for $1.84, they're $2.15 by $2.35. The 24 puts that we sold for $1, well, they're $1.08 by $1.22. So we're up $82 on the put that we're long, and we're down $30 on the puts that we're short. Okay, and that's again looking at that again 82 minus 30. So there's what you see, and that's your profit legs, the profit and loss. So $26 per contract, or $52 for both contracts. And when you see down here, you're seeing what both contracts look like. Let's move it another day. Let's do a plus a day. All right, here's the fourth. Not much change. I mean, up $28 on the position or per contract. All right, let's move it up again. Now we go through to the fifth. And the fifth, we're actually down. So we were down a little bit on this trade. So you can see down $12, down $24 on two contracts. Again, nothing goes up or down every single day, right? Let's go plus a day. Here's the sixth. Now we're back up, and we're up big, all right? Now, we hit 97.6%. That was the close of the day. Earlier that day, we hit over 100%, and that's where you got that get out of half, right? And then you can see kind of moving on. Let me bring us up to the ninth. Here you go. Here's the ninth, up 129%. Okay. The 10th, back to 113%. And actually, we were out of the second half of this position on the 9th. We hit that 129%. It was time to go ahead and bail out of the second half of the trade. Now, let me show you. That was the high probability trade. Let me show you the high profitability trade. The high profitability trade was they're going to be cheaper, right? So when you buy the 24 puts, that went out at 93 cents. We sold the 22 puts, that was 45 cents. The difference between the two, 93 minus 45, ended up being about 48 cents or $48 for the position. Now, the position ended up about 12% at the close of the first day that this trade was on. So again, we put it on in the morning, and then by the afternoon, it was up a little. Let's watch what happened to it. And it's going to do kind of the same thing. I mean, if you look at the next day, it was up 22%. That was the third. On the fourth, it was up about 35%. Let's bring it to the fifth. And remember, it was the high probability trade was down. Well, the high profitability trade was down too. It was down 54% because we saw that pullback with TripAdvisor. But again, look what happened on the 6th. Boom, 108% return. Get out of half. Okay. And then what happened on the 9th? 241%. There's your high profitability trade right there. All right. So that's what happened with TripAdvisor. And I wanted to explain to everyone here, not just the Quantum Data Profits members, because we're going to talk about this and more at 1 o'clock. But I wanted to show everybody the difference between a high probability trade and a high profitability trade. So one costs more. That's the high probability trade. But we don't need it to go as far during its life cycle to make money. The other one is a high profitability trade where you get those spikes, spike up in a bull market or a spike down in a bear market. It's going to spike those returns. And that's what happened here. It spiked those returns up. And this was the end of the day. Imagine where this was earlier in the day. It was actually higher. So that's what prompted us to go ahead and get out of the second half of our trip trades. So we didn't want to be, here's my pun, Eric. You don't want to trip over dollars to try to pick up nickels. And when
that's good advice.
We were tripping over nickels and picking up dollars. That's what we ended up doing here with Trip.
I like that one better.
All right. So,
ready for some questions?
I think it's time to let's throw some charts up there. If you've got a chart that you want me to take a look at using our all-in-one chart technology, then now is the time to throw a symbol at me. We'll take a look and see where it is in the realm of Fibonacci, in the realm of our channel technology, and also in the realm of where we see implied volatility. All right,
Tom,
so Eric,
while we wait for a few symbols to come through, why don't we answer this question really quick from the new member? Tom, is the large candle in Ethereum representation of institutional activities? You've
I
seen
don't
that
think
big up
so.
and down, no?
No. And the reason why is because remember, the majority of folks that own cryptocurrency are the whale wallets. Okay, institutions are getting in, and they're getting in. And they're buying. Now that large candle up could have been institutional buying, but I'm going to tell you that large candle down more than likely was one of two things. It was either a whale wallet that was doing a little selling, or it could have been a lot of stops that were in the market by retail traders. And I got to go back and analyze. I saw that and I just didn't have time to analyze it this morning. But I want to go back and analyze the wallet addresses and see who was selling and how much they were selling. And when I say who, I'm talking about wallet numbers, wallet letters and numbers. All right. And so I'm actually going to, my research team is actually taking a look at that. If I have anything to report, then I will report it back here on Monday when we get hot and heavy into microcurrencies.
All
All
right, I
right,
have some symbols here for you now. They've come through the
let's
chat.
do
The
it.
chat has come through. WEBR is looking to check out Luna, Luna.
LUNA, isn't that a cryptocurrency?
I'm not sure. What does it come up on your chart?
Oh, no. Luna Innovations. My bad.
It's all right.
I was thinking of something else. Yeah, so here's Luna. Now, the way you're looking at this, I can tell you right now, when I look at this chart immediately, I can see that the options on this are absolutely terrible because when you see all these spikes, I see 1, 2, 3, 4, 5 spikes across a 6-month chart. This is not earnings. This is bad options, bad option prices that are pushing these volatility numbers up and down. And so for that, let me just do this. Let's go in and let's look at the channel test. Let's get it a little more closer. All right, here you go. Now we're starting to see something. $9.50 stock. I wouldn't trade the options on it anyway because now it's only $5.50. In fact, it's $5.26. But you can see very clearly we're at the bottom of the Fibonacci range. All right. That doesn't really tell us that there's some support here. But what does tell me that there's some support here is we're seeing this channeling. This channeling's coming in. And I got to tell you, the support that I saw on the channel really took us just a bit below 5. But it looks like maybe we dropped support a little bit early, getting a little bit of a move higher. We did run into some resistance. I still am going to go with my channels and say we haven't seen the low yet in Luna. Next
up, how about some Tesla? You knew you were going to get
All
Tesla.
Right. I haven't looked at Tesla in a couple of weeks. And so let's take a look at Tesla. And here's Tesla on the screen. And I can look at this a couple of different ways. I'm going to go in and run the stress test on this one because it is a little stressful for people that own it above $1,000 a share. Seeing it's at 790 or 785 right now. Again, let's take a look at this. You've got the highs on Tesla. When you see something that was high to low, that means that we could potentially be in a downtrend. When you're starting your Fibonacci on a high side and you bring it to a low side, now what we're doing is we're looking for what? We're looking for resistance numbers. Tesla's been all over the place. So you got to go past Fibonacci and you got to start looking at channels. The channels long-term still show up, all right? Intermediate term shows sideways. Short term shows down, but they're all looking at consolidation. You see this, Eric? You see that long-term line?
I see it.
It goes up to it's going up to right below 750. Intermediate term line coming across right to below 750. Short-term downtrend coming right down below 750. That's your point. That right there is what we call the inflection point. This thing goes below 750. You're going to see some shorts come out of it. And so it looks to me like 740. Somewhere around 740 looks like the area of what we like to call triple stack compression. So that's my take on Tesla.
All right. How about PayPal, Tom?
PYPL. Take a look at PayPal. And you can see here, and I have to go through, and unless I have these already built in, I have to go through and just hit that stress channel one more time. Wow. Wowza. Long and intermediate and short term all pointing down. Now, we hit just below 80 and did that yesterday and again today. I don't like this chart. I don't, this stock looks like it still continues to want to move lower. And just eyeballing this right now, 75. This is 77.96, but all of this compression is coming down here around the 74, 75 area. And that's where I think we run to before we potentially find some sort of compression buys that are happening with Tesla. All right. I see Bruce over on YouTube, and he's asking about UNG. So let's go ahead and look at UNG. That's the other gas, right? I call that the other gas, or the other fossil fuel, right? The clean energy. So take a look at natural gas, and this one again, crazy. If you're in oil or you're in energy or you're in cryptocurrency, you're in the volatile stuff right now. Let's go ahead and run the channel test on this and see where it's likely to go. So the good news is with natural gas, if you're bullish on it, that everything looks to be pivoting higher. And as you can see here, the other thing too is that the Fibonacci starts low and it goes to last week's highs at $30.10. We did pull back. We ran right through both the medium and long-term, what I like to call the equilibrium areas. From there, we dropped down, and yesterday hit two things, Eric. Number one, we hit the 38% retracement, opened there and bounced there. And number two, that was also the bottom of our intermediate term up channel. So that was a really good area of support. Today, we're confirming that support level's in. So where do we go from here? Looks to me like new highs on the horizon for natural gas. So for those of you that traded natural gas, if we get new highs, hip, hip, hooray. For those of you that are using it, all right, as consumers, I'm sorry. I think we're going to continue to see higher highs in natural gas, in oil, and of course, regular, unleaded, and super, which I can't stand when I'm filling up the truck. And I'm filling up the truck a little bit more than I normally am, Eric, because now I got to cart myself to the office for the near term until I move the office.
Back and forth, house to house.
Yeah.
We have time for one more question here, Tom, or one more symbol?
Absolutely.
How about,
let's throw one more out there.
How about Etsy? Let's take a look at Etsy.
Etsy. There's one we haven't looked at in quite some time. ETHY. So we take a look at Etsy. You can see, and let me do the same thing I did with everything else. Let's throw it on the chart. Ugh. I mean, talk about a stay-at-home stock that left the station. I mean, you go back to, again, you got to go back to November. And this may not even be the high, but it was the high for most of the market was in November. And Etsy was a $300 stock then. And since then, we've seen it trade. Now it's down to $82. It's shaved off, I want to say, 75%. And doesn't look like it's done yet. I've got, in order for this thing to I think, find a bottom, we have not capitulated yet. Capitulation shows this double range down here in around 65. So if we get a hard move to the downside around 65, we might find some short-term support. But boy, the trends on this one just are ugly. And I hate to say that if you own Etsy, but that's what it looks like. All right.
Thanks, Tom. How about your pick for the day?
Eric.
Yeah,
I know. You know what? Before we head out, I had a watch list yesterday. And we had 3 stocks. So those of you that tuned in last night at 7 o'clock, I didn't want you just to, tune in and listen to me talk about how Quantum's doing. I wanted to actually give you something to walk away with. And so we had a couple Quantum picks that came off the app yesterday. And so I wanted to share those with everybody. And I know it's only one day, but let's take a look and see what they're doing. And so I'm not giving out option trades, guys. Those we're going to talk about at 1 o'clock. Okay. But I do want to talk about the stocks because I did give you the stocks symbols yesterday. And let's take a look and see what they're doing today. So I'm going to go backwards here. The first one I want to talk about is, let's kind of bring it up on the screen. I had a bullish trade in XLE. So let's go ahead and put XLE up. This was a quantum bull. As you can see, I got all kinds of junk on here when we look at the all-in-one channel. All right, there's your all-in-one channel. But take a look at this one. Quantum bull, and then trends up. Volatility's up, but volatility is up in this entire space. If you're in energy, if you're in oil or oil stocks, volatility's up. Look at what's happened to this one today. Stock was yesterday was trading around the I want to say $77 area. We're at 79.73 right now. If I were to just kind of punch that in on another chart that I have here, XLE, XLE is up 3.5% today. All right, so that's our quantum data bull that we shared with everybody yesterday, if you were at my 7 p.m. event. All right, what were the bears? Okay, one of them was BURL. Let's take a look at BURL. BURL is Burlington Stores, formerly known as BURL, Burlington Coat Factory. I think we found out long ago they offered a lot more than just coats. All right, their stores, they do now. But take a look at this one. If coats are all they're offering in Florida, well, we have a nice sunny hot day, and coats do not sell down in Florida. But you know what is selling? The stock is selling off. The stock is off better than 2% today. And that actually opened and traded a little higher this morning. So that stock is off. We're expecting new lows on that one. And then the other one, the final one I want to mention is ROST. Okay. ROST is Ross Stores. That's another one of those inexpensive outlets, ROST. And again, yesterday was kind of trading just below 90. And today we're at 88.64. We're down about 1% on that one. So all three of these quantum data stocks that were available on the app, and I brought the app with me last night and shared it. All three of these are all moving in the right direction. A lot of stuff's moving in the right direction. In fact, going it from here in the right direction, folks, would be giving this service a try, giving our alert service a try. If you want to join me in Quantum Scripts, you know, you've already missed out on some pretty fast profits. You can still join us. All you have to do is click the link above or click the link that has been showing up in the chat box, or give Gabe and his fine folks a call at the office. The number is on the screen. You got to be a member if you want to get the alerts. And we're putting out, well, this week we've put out, I want to say 6 alerts this week so far. Okay. All 6 of them, I can tell you what they have in common. They're all not only quantum data alerts, but they're also all under $500. In fact, many of them much, much cheaper than $500. Calls, puts, debit spreads, each one is used and set up to maximize profits. Okay. Talked about XLE, bullishness last night. Talked about bearishness in Ross Stores in Burlington. Take a look at them. Like I said, if you haven't joined us yet, you guys, you can see it. Writing's on the wall. The numbers are in. This strategy works. For all my premium subscribers, take a break. I'll see you in about a half an hour. Otherwise, stay tuned, guys. Midday Momentum with Garrett is coming up right now. Thanks, and I'll see you next week. Bye, everyone.